People are bleeding money every single year, and they have absolutely no idea it's happening. Not because they made a bad investment, not because they got unlucky, because they're using credit cards like a tool they don't understand. And the banks are profiting off that ignorance every single day. In the next 9 minutes, I'm going to show you the exact system that people in the top 1% use to turn their everyday spending into real compounding wealth. No gimmicks, no get-rich-quick schemes, just a straightforward framework that works and that you can start implementing today, even if your credit score isn't perfect. So pay close attention, because what I'm about to share changes how you think about every single purchase you make for the rest of your life. Welcome back. Or if you're new here, I'm your host, and on this channel, we break down exactly how money works so you can make it work for you. Today's video, how to use credit cards to build wealth, the system banks don't want you to know about. Let's start with a truth that most financial content completely glosses over. The average American is carrying over $6,000 in credit card debt right now, and the banks, they love it. Because they're charging you 20%, 24%, sometimes 29% interest on every single dollar you owe them. Think about that for a second. You swipe your card, they charge you interest. Then they take your money and invest it, earning returns of their own. They are literally using your spending habits against you. You are funding their profits. But here's the part that most people miss. The same system that's designed to trap the financially unaware is also designed to massively reward the people who understand it. Credit cards are not inherently evil. They are a tool. And like any tool, in the wrong hands they're dangerous. In the right hands, they're extraordinarily powerful. The shift starts with one mindset change. Stop seeing a credit card as debt. Start seeing it as a cash flow weapon. I call this reward stacking. And it's how financially savvy people extract hundreds, sometimes thousands of dollars per year in pure free value from cards they were already going to use anyway. Here's the system broken into 4 steps. Step 1. Categorize your spending. Pull up your last 3 months of bank statements. Where is your money actually going? Groceries, gas, dining out, travel, subscriptions, online shopping. Most people's spending falls into 4 or 5 clear buckets. Step 2. Match the right card to the right category. Every spending category has a credit card specifically engineered to maximize rewards on it. A card that gives you 5% back on groceries. A card that gives you 3 times points on dining. A card that gives you 2 times on everything else as your base layer catch-all. You're not spending more money. You're just routing the same dollars through the right card for that purchase. Step 3. Never carry a balance. This is non-negotiable. The moment you carry a balance from one month to the next, the interest charge erases every reward you earned, plus more. The entire system only functions at 0. Pay your statement balance in full, every single month, without exception. If you can't do that yet, that's the first thing to fix, before anything else in this video applies to you. Step 4. Redeem your rewards strategically. Cashback is good, but travel points, when redeemed correctly, can be worth 2 to 3 cents per point, sometimes more. That means a 100,000 point sign-up bonus can be worth $2,000 to $3,000 in flights and hotels, instead of $1,000 in cash. The redemption is where most people leave money on the table. Here's where it gets genuinely powerful. And this is the layer that almost no finance creator talks about. The rewards you earn from your cards. Invest them every single time. Every cashback deposit that hits your account, move it to a brokerage account. Every time you save $800 on a flight using points instead of cash, transfer what you would have spent into an index fund. Treat your rewards as income, because that's exactly what they are. Let me give you a concrete example so you can see how this compounds over time. Say you spend $3,000 per month, groceries, gas bills, dining, subscriptions. With a properly stacked 2-card setup, you could realistically earn $100 to $150 in monthly cashback rewards. That's $1,200 to $1,800 per year in pure free money from spending you were already going to do. Now take that $1,500 average and invest it annually into a broad market index fund. At a historical average return of 10% per year, the same return the market has delivered over the last century. In 20 years, that's over $100,000. $100,000 from money you were already spending on things you were already buying. That's not a trick. That's math. That's compound interest applied to a habit you can start this week. There's a third major benefit to this system that people chronically underestimate: what it does to your credit score. Your credit score is not just a number. It is a financial asset, and a difference of even 100 points can mean tens of thousands of dollars saved or lost over your lifetime. Think about a mortgage. On a $120,000 in additional interest paid by the person with the lower score. Better score, better rates. Better rates on mortgages, car loans, personal loans. Access to premium credit cards with higher reward rates. It compounds. Here's the formula for using credit cards to actively build your score. Keep your credit utilization under 10%. If you have a $1,000 in reported balance, pay it before the statement closes, not just before the due date. That distinction matters. Pay your statement balance in full every month, on time, every time. Payment history is 35% of your score. It's the single biggest factor. Don't close old accounts. Length of credit history matters. Your oldest card is your most valuable card for your score, even if you barely use it. Be strategic about applying for new cards. Every hard inquiry dings your score slightly. Apply with intention and a plan, not impulsively because you saw a good sign-up bonus. Now I want to save you from the 4 mistakes that derail people before they ever see results from this system. Mistake number 1: chasing sign-up bonuses without a strategy. A 100,000-point bonus is incredible if you have a plan for it and the credit to support it. But if you applied for 6 cards in 12 months trying to collect bonuses, you've tanked your score and you'll be rejected for the best cards when you actually need them. Slow is fast here. Mistake number 2: overspending to hit a minimum spend requirement. If a card requires $1,500, don't do it. You're not earning rewards at that point. You're buying the bonus at full price. Only apply for a card when you naturally hit the spend threshold. Mistake number 3: ignoring annual fees without doing the math. A $550 for nothing. Audit every annual fee card once a year. Cancel ruthlessly if the math doesn't work. Mistake number 4: thinking credit card debt is manageable. There is no such thing as manageable credit card debt at 24% APR. That interest rate is a financial emergency. If you're carrying a balance right now, stop everything. Every dollar you have that isn't covering essential bills should be going toward that balance before any of the strategies in this video apply to you. Here's the whole system in 4 sentences. Reward stack your spending by matching the right card to the right category. Never carry a balance, ever. Invest every dollar of rewards you earn and protect your credit score like the financial asset it is. Do those 4 things consistently, and you will be extracting real, compounding wealth from your everyday spending for the rest of your life. No extra income required. No lifestyle changes. Just using a tool that's already in your wallet correctly. If this gave you value, subscribe. I post every week on building wealth with the money you already have. It's completely free, and it might be the most valuable free thing you do this week. Drop a comment below. What's your current go-to credit card, and are you reward stacking yet? I read every single comment. I'll see you in the next one.